tax loss harvesting. As the end of the year is coming, I'm sure a lot of you have some losses in your portfolio. And when it comes to selling your position and recognizing a loss, it is called tax loss harvesting. In this video, I'm going to go through some of the pros and cons, how to do it, and whether you should do it, and what is really the benefits of doing it, and what are some of the rules that you need to be aware of in case the tax authority comes back to you and say you can't recognize that loss. So this is actually something we went through in Investing Accelerator this week, and I thought it would be very helpful for you to know as well. So if you're interested in learning more about my investing strategy, go to my website, 5minuteinvesting.com/free case study. So let's get started. First of all, what is tax loss harvesting? It is a capital loss that can use to offset a capital gain within a non-registered account. So it just means that you're using your losses to offset any capital gain you have this year. And as the market is down significantly this year and we're heading into December, chances are you have some losses in your portfolio, whether you invested in technology stocks that dropped significantly, like medium to small tech, or you invested in some other industries like airlines that also went down as well. It only works in a non-registered account, meaning not a TFSA or RRSP in Canada. It is not a 401k, not a Roth in US, not an IRA, so only regular investing accounts. And you would look to do this before year end, and generally, capital loss incurred can be carried forward indefinitely to offset your future capital gain. Now, to prevent people from gaming the system, both the Canadian and the US government have a wash sale rule. So a wash sale is a transaction involving the sale of one security within 30 days, either before or after the sales, and purchasing a substantially identical stock or security, either directly or indirectly through derivatives such as a call option. So when you try to sell, let's say you have Apple and you have some losses, and recognize that loss, you cannot buy it back immediately because the CRA and RRS will come get you and say, hey, you're just gaming the system, you're not really selling your security. So you need to wait 31 days in order to avoid the wash sale rule, and I'll tell you how you can avoid it. Now, one possible way to avoid the wash sale rule is that let's say you sell Apple and you buy an ETF in the technology industry. So you're trying to buy ETFs with similar exposure, so then it is a different security, but still gives you the same exposure to the upside and the downside, and that will allow you to recognize the loss this year and reduce your capital gain. Now, if you plan to do tax loss harvesting, you can, for example, switch from Apple to Microsoft, or switch Google to Microsoft, or switch Google to Apple. So basically you're playing around within the same industry or similar exposure ETFs to do that. When it comes to Canada, you can net off capital gains you have this year, and you can also carry back your losses for 3 years. So if you have any capital gain last year or the year before and you want to net it off, yes, you can do so for up to 3 years. And this is particularly helpful because 2021, 2020, and 2019 are very bullish year. Now for US, unfortunately, you do not get to carry back capital loss. You can only carry forward, and you can carry forward indefinitely, which is fine. But one thing you can do is that you can net off your capital loss with income, and you can net off up to $3,000. Now, if you're married and you're filing separately from your spouse, then you only get to net off half of that, so $1,500 per person. So that is pretty much it. And if you plan to do tax loss harvesting, you should plan ahead, do it in November or December, and you don't do it on the very last day because usually it doesn't kick in for like 1 to 2 days. So if you do it on the very last day and it takes another 2 days to process the transaction, then you miss the deadline and it turns into the next fiscal year. So try to do it early December if you are planning to do tax loss harvesting. And that is it for this video, and I hope you have a great day.